Good morning, YouTube. This is TerrenceRe, that is, with your stock market update this morning. Right now, we got the S&P futures down about 23 handles. The NASDAQ is down about 1%. The Dow is actually flat. Basically, it's flat. It's up. It's in the green, but it's not up a whole lot, about 0.08%. And you got the Russell up almost about 0.5%, right? But you're looking up here, you can see that the VIX futures are up, and you see that the VIX is up. So you got vol is up. So you know what that means is when you got volatility up, generally the market is pricing in risk, right? So it's letting us know we got a little bit of risk. And the bonds are down, the notes are down, gold is down, Bitcoin is up about 2%, the Bitcoin futures, and then we have the 10-year yield is up about 3%. The dollar is up a little bit, and then the financials, the XLF is up, and the XLE is up. So generally, like when I see a market where I see the financials up, which is the banks, and you can see I have the banks on my watch list: JP Morgan, Goldman Sachs, Citi, Morgan Stanley, Bank of America, Wells Fargo. With them all being up, I don't see a big sell-off today. That's just because to get a big sell-off, you're gonna need the banks to sell off too. You'll need the banks to sell off, and you'll need energy to sell off. However, the market, you do have FANG down. So Google is down 2%. Microsoft is down almost 3%. Apple's down. Facebook's down. Tesla is down. Netflix is down. And I'm gonna pull up the Netflix chart in a minute and give you guys a little warning if you're in Netflix or you're a Netflix hodler. So, for the most part, I think we're gonna get some sideways action until we get Jerome Powell to speak tomorrow. The market's key issues right now, as I see it, is you got Omicron, right? So, but the market for the most part thinks Omicron would be manageable. It's not really it's not seen currently as deadly as Delta. So it's not like it gave we got that initial reaction. Let me go to the SPX, the S&P 500. So we got that initial reaction right here, and we kind of got this little holding pattern over here. So with that being said, what are we holding, waiting for? Everyone's waiting to hear what the Fed Chair Jerome Powell is going to say tomorrow when they're meeting right now. Now, this is my own personal take on it, so take it with a grain of salt. I think the market, or the large participants in the stock market, already know what they're going to do, and then they use the news to justify the action. Right? It's almost like you was when you was younger and you were dating, you had a girlfriend, or I gotta preface make sure if you're a woman, you got a boyfriend, and you're a man, you had a girlfriend or whatever when you was younger, and you knew you was gonna break up with them, so you just was waiting on something to happen, right? And as soon as it happened, they gave you a reason to break up with them. And that's how I really view the news. The news, it justifies what was already going to happen. And so I think that we're going to get a sell-off anyway, just based off of what I see in the market. And I see that just looking at the charts, right? So if you look over here at let's take a look at Netflix per se. Look at Netflix. Now what you see right here, make this big so you can see it. I got a low, right? I got a low, and then I got a pullback into my sweet spot. Anytime I get a pullback into this zone between the 61.8 and the 38 on the Fibonacci retracement, and then I get another low, that signals a down move for me. So if you're in Netflix, I don't think you're gonna, me personally, this is a good, and you can see it falling. It's down $12 today. This would be, if you're gonna, this is a good trading vehicle. It's not something that I would invest in right now. It's not something that I would even hold. You could look to maybe do like sell some calls in here. If you have a long position in Netflix, you could sell calls against that long position. You should have been selling them up here, but it's never too late. You can sell calls in them. If you don't have a position in here and you wanted to trade it, I'll give you an example because we got a high IV rank. So you could come over here. Let's go to the option tab. Let's go to the option chain. I would stick with the monthlies. The monthlies are always more liquid. The 38-day or the 66-day, right? I would choose the 38-day, and you could do something like an iron condor, right? It just depends on how much risk you want to take. You could come out here, you got an expected move of $65, right? So you could come out here and you could do something like sell the 17 delta. You could do buy the one right directly down from it. You collect 65 cents. Come over here and sell the 15 or 17 delta on this side. Either or, you can sell the 15, buy the one directly, collect 125. Now what this would do, I'm gonna lock this in. So basically all this is saying is that this is a $5 wide iron condor and you're taking in 125. That's gonna leave you about, just doing the math on that, that's about a 75% probability of profit, somewhere in there. And if you wanted to collect more credit and you wanted to, all you have to do is just move it in some. So like you can move this down and stay, instead of sell on the put side, if you want to come closer and you want to take in more premium, some people like to collect a third of the width of the strikes, which is going to give you about a 68% probability of profit. So let's say we want to move the call side in one. I wouldn't move the call side. Let's do the put side since it's already down. So we'll move the put side in to 525. I'm gonna come right here and change it to 520. I'm gonna unlock it to see what, now you collecting 145. So all I did was on the put side, just moved it in some, right? And by doing that, I took in more premium. And you can keep doing that. Now, just remember that the closer you move in, you're lowering your probability of profit, but you're collecting more premium. And you can say, well, why sell an iron condor? Why sell premium? Because you got a high IV rank. That means that option pricing is more expensive. So now you can make money on the IV rank coming in or time decaying. And basically you're selling something up here, selling something in here, and you don't really care about, you just want the market to just bounce around in here. And you make money over time. You're selling a decaying asset. That's something that options give you the ability to do in this particular market. Now, I don't personally, now I'm gonna lay it on the line and let you guys know, I have this projected on this Fibonacci levels to be all the way down here around, anywhere between 475 and 450 before they do anything. This is a down move for me. I may do something on a pullback. I would like to buy a put spread. I would have liked to have seen it right here and got it, because you might get a little pop right in here. So basically, if you look at this this trend line right here, we have 1 touch, 2 touch, 3 touches. This is where it broke out. This is where it broke out. You see right here, back in August, right here where I got my cursor, where it broke out. You could see it come down into this area and then get a bounce. And so if you were looking to get long, this will be right around the area, in my opinion, somewhere down in here where you could get a pop to the upside. But I still think that even once it get up in here, it's gonna, you're gonna have sellers come in and sell this rip. So I got that going over here on Google. Now I actually am in Google. If you see my previous videos, you see this trend line right here. Actually put my put spread on here, and I've been holding it, and it went up into here, and now it's back here again, right? And I'll show you exactly where I'm at on that. I got 24 days on this put spread. It's right there out of the money. I just needed to break down below here, which I do think is going to do. And this is why I think we're going to get a sell-off. Everyone wants to hear what Jerome Powell is going to say tomorrow. Is he going to be dovish? Is he going to be hawkish? The Fed, they've previously stated that they're going to, they're going to lower their bond purchasing. So, they stepped into the bond market. And you can look at that evident in the TLT. If we go back, this was COVID, somewhere back in here. Well, but this is where they announced that they were going to step in. This is a 3-year chart and start buying bonds. They stepped into the bond market and start purchasing bonds, and you can see it went up. You can see I got this charted. And if you've been following me, I like to chart the gaps, and I like to put the lines, and you see it went right up into there and then pull back, right? I am in my, I have a long dated portfolio with Fidelity, and I'm long bonds in there. And I've been long bonds. I actually got long somewhere right around in here, took a little pain, and I've been holding, right? And so bonds is a real slow moving beast, but it's a way to hedge portfolios. So if you got a portfolio and you're down in it because of let's say you're down because of FANG, like you own Apple. Well, Apple's been killing it, right? Apple's been killing it, but everything else, look at Amazon. Amazon is in like a little holding pattern, right? If you look at it look at it, it's just been going sideways through here, and you got a big move here and then here. So if your portfolio's been going down the past few months, you jump to bonds. You can jump to the TLT. That's a way, and you can't own that. Like and it pays a dividend. So you get paid dividends for owning the ETF, which is TLT, which is the bonds, right? You can also look at let's take a look at Tesla. I want to talk about Tesla. Before I forget, I got some notes, things I wanted to take here. Now you look at this. Now I'm gonna take everything off but the lines. I just want you to see these trend lines right here. I drew this. If you go back and look at the video, and I'll link it on here. Well, I did stock analysis on Tesla. That was maybe a couple weeks ago. I drew this was on there. I took them off today, but I also had these gaps plotted on here, right? It's right here into this gap level. I'll redraw it again. Go back and watch the video on Tesla stock analysis. And I told you, I said, if I was going to buy, it would have to be this area right here. It is here. You may get a bounce right here, right? You may get a bounce right here up into here. I don't know if it's going to continue to go up though. And you say the reason why is I may come out and do a video on harmonic patterns. I can't do it. Thinkorswim doesn't have the charting package to do it, but I can do it on TradeView. But basically, what I seen, I'm gonna manually draw this harmonic pattern. You got, if you look at it from here to here, I'm gonna have to stretch this out. It's almost like a W. You got to be able to, I look at charts all the time, so it's easy for me to see. If you come from here down, up, down, and then up again, that looks like a little W. You can almost, if I pull up the RSI, you can see it on the RSI. You see it right here, down, up, and then it came right here, and then boom, and you got a down move. That would be like a harmonic pattern where you sell at the top of the W. And basically how you find what area, you say, well, what area would you know to sell that at? You would come down this high to this low, right? It pulled up into that sweet spot in the area of the Fibonacci, retracement area, and then it broke down and took out this low. The same thing Netflix did, right? So if you were to draw your extension from here, all I did was go from high, low, back up to high, and you see it took out this low. Now look where I got it charted going down to. Based upon that, you can see Tesla, you can see it come all the way down and be, that's horrible. Now, I don't know if it's gonna do that. Excuse me, because any one of these levels in here, it could stop, right? So I'm not saying, you say, man, you saying it can go all the way? No, I'm saying that you got certain levels that it could turn. You can see that it's respecting this 61.8. It came right here, touched it, pulled back, and then we got another low. So what I'm saying is the next area is 850 or 848.79, right around in here, right? Right here where it pulled back. That's your next area. Now, after that, we could get a rally. The next area is at down here at the 1618, which is right around $700. So now what will you say if I own Tesla? A lot of times people just looking to buy dips. You don't necessarily have to do that. If you own Tesla, you can hold it and say, yeah, I own it. I believe that in time, Tesla could be, because a lot of times, I've heard numbers like 3,000, 3,500. That's fine. Sell calls against your long position. Sell credit spreads against your long positions. So basically, so if you're long, what are you saying? Right here, I don't know if I would sell a call spread right here. Maybe I would like to on anytime you get an up move, that's when you want to sell, right? On an up day. You don't want to sell on a down day. This is day is already down $12, which really ain't a lot for Tesla. It's only like 1%. Well, you would just come in here, and if you got a long position, you can come in here on 38 days, and you just come out here, come down, come around to like the 35 delta, and I certain deltas I look at. That's how I know where I want to trade at. Why hit the like button, hit the subscribe button, because I'm gonna do one day I'm gonna get to doing. I'm working on my page and getting it updated, and I will be doing videos on like how to choose your trade and how to pick the right delta, or the right delta for what you want to do. Right here, you can see I said 35. You can see somebody here. You got 2,400 trades, 2,443 right here. So certain deltas, you just know 35. Why? Because if I sell to 35, I know I got basically about a 65% chance of probability of profit just based upon that delta, somewhere right around in there. So you come here, sell that, and then you could do, depending on how large your position is in Tesla, you could just leave it right there. Now, just by selling, now if you sell that naked call, you're gonna take in $3,855 in premium, right? If you have, let's say you have 100 shares, this is gonna shave off 34 deltas of that 100 share that you have. So now you would be long basically about 66 shares because you basically capped your upside to protect yourself. Instead of just closing out of your position and maybe taking a loss, or it depending on how long you've been in Tesla, you could sell the call spread. The call here, this is just a call, but if that's too rich for your blood, you could come right here and then maybe do like a $10 wide and buy this call. So now you got a spread. You capture. So now you got a call spread, right? Now you see it says 280 credit. So you took in $280 in premium on a $10 wide spread. The risk is 720, and now basically the most you can make is 280 instead of that. So it capped your the premium that you collected, but it also lowered the risk on this particular trade. So this is something that you can do to kind of keep from closing out of your long Tesla position. You can do this with all of your stocks. for the most part. You can do spreads, or you can just do them as trades. Now, personally, right now on Tesla, I would not sell. Like I said, you don't want to, in my personal opinion, get short when the stock is down. In this particular position, I would be doing something like a neutral trade, i.e., either selling a strangle or selling a iron condor. And those iron condors, like I said, you can also come up here. Now I use Delta, but you can come up here when you're selling, I'm gonna click on Delta, and then I'm gonna come down here to option theoreticals and Greeks. And then I'm gonna come over here and I'm gonna change it to probability of out of the money. So you can look at it and see you got a probability if you sell a call right here at this, I think this was the same strike I was at 1050. You sell this, right? And let me lock it in because the price is changing. Now, you see what that says? 72 or 73%. You have a 73% chance of the market staying out of this option expiring out of the money. So in 38 days, the platform is telling you you got a 73% chance of this option expiring out of the money. The math is there. So basically, you're selling a high probability trade. You're at 1050. Let's come over here and look at the chart. So your call basically is right here. Now we all know Tesla can rip, but that you're right here at 1050, about right there. So you can you can come up here. You can do all kind of things. You can say, well, what's the probability of it touching right there? Come up here and I can change that. Come up here to option theoreticals and Greeks. Come over here to probability of touching. You see right here now it says 56%. Right. So that means that the market has a 56% chance of touching your strike. You have a real good chance, but that doesn't mean that it'll expire there. And you say, so one thing that option sellers do, and that I do as well, I don't look to hold this for 38 days. Once it's going to decay. So right around the 21, 22, 23 days, that's when the theta decay accelerates. Also, that's when the gamma, you start seeing your options move your deltas will really move on the option. So you want to look to close it early, hold it for a couple of weeks, and then get out. And if you want to sometimes I'll just put probability of touch and come down and sell the option that's below 50% probability of touch, which will be right here, the one at 1075. So that means you got less than a 50% chance of being touched there. Right? So there are all types of theoreticals that you can put up here. And basically they use something called they have like the Black-Scholes like pricing model for options. And so that's how they can plot out. I actually think Thinkorswim has like 2 or 3 different ones you can put it on, and you can change it in the system. But they pretty much are plotting out like the path of an option and the probabilities, and that's how you get your numbers. Let the system do it for you. You don't have to do the math. So I'll come back and I'll put it on Delta, and that's that. Meanwhile, hit the like button, hit the subscribe button, share this video. In my opinion, I'm giving out straight gems on this. Once again, that's pretty much it. You're not going to get a whole lot of movement today. So I would sit tight and wait till tomorrow. I think after tomorrow, you're going to get some good movement in the market. You're going to get some great day trading opportunities in the market. I think tomorrow, after that news comes out, there will be opportunities to get long. I mean, like intraday, because the market will probably move. So those are great opportunities for you to make some money in the market. One thing you could do tomorrow, which I will be looking to do, is coming to the SPY, right? The S&P 500 ETF. And the reason why I said I would come into here and look, as we see the market is beginning to roll over a little bit, I will come here and come into the weeklies. Day trading options, in my opinion, you want to be, I'm not a financial advisor, but you want to be in the weeklies when you're doing that. Tomorrow, you're going to have one option that's going to expire. And then you're going to also have an option. You got an option that expires on Friday as well in the SPY. And it's very liquid. So you don't have to worry about, you're going to get the price you want. And you could come into here, you want to get long, you come on the call side. You want to get short, you can come on the put side as far as buying options, right? And this is just for like day trading options. I'm going to do a video later talking about how I pick deltas for day trading options. And that's something that's really different from the ones that I use when I'm doing longer dated. Because if you're going to trade something during that day and you don't, trust me, you don't want to hold those call options overnight, right? Because of the theta decay is crazy and you're going to lose money most of the time. So these are options that you're gonna buy, for 5-10 minutes, maybe a few hours throughout the day, and then you're out. So once again, this is your stock market update. Watch Netflix. If you're, in my opinion, I'd be out of Netflix right now. If you are still in it and you want to hold it, you believe in the company, I'm not saying it can't come back. You're going to get some bounces. I would advise maybe selling some premium against those long positions. But it is a great vehicle to trade in right now currently. And with that being said, I'm out. Peace.